Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I am flying solo, Jamie Bateman here, flying solo as a host today, and I'm joined by a legend in the note space, I would say, Mr. Eddie Speed. Eddie, how are you doing today?
I'm good. How are you?
Doing well. For the few people who are into note investing who may not have heard of you, why don't you give us a little bit of your background, if you could?
Okay. Well, I started in 1980, so a long time ago, right? And I started out my father-in-law got me started in the business. And at that time, it was specifically, we were buying seller finance notes. And seller financing became super common back in the early 80s because of high interest rates. So if you kind of think about the note business overall, it's sort of the peripheral of the regular business, and seller financing was necessity because high interest rates, and somebody seller financing could carry it lower than bank rates. You say how high? Interest rates got to 21%.
Wow. Yeah.
And so that's how I got started. And of course, one thing just layered and did on top of another. And here I am now in kind of an old man, right?
So could you hit on a few of the highlights over the last 40 years?
Well, there's a few things that I think some people may not know. I set up the note system for Homevestors. So Ken D'Angelo, that founded Homevestors, was here in Dallas-Fort Worth where I was. And we really set up a system where the Homevestor franchise could create seller finance notes to a formula. And really that revolutionized the note business because we went from just mom and pops creating seller finance notes to a lot of real estate investors who could do dozens or hundreds of notes in a year. And some of the biggest buyers in the business, Metropolitan and Associates at the time, they were capped out at $50, $70 million in production a year. And they got to, 2 and 3 and 400,000 a year. And that was because real estate investors learned how to use seller financing correctly. It was good for the note business, and it was good for real estate investors. So there was a few things that I would say, honestly, it was just accident. People look like, oh my God, how'd you envision that? Mm-hmm. It was a little bit like Moses parting the sea. I didn't actually know the sea was going to part, right? So sure. There were some funny things that happened along the way like that. And of course, I've been in many of the cycles, certainly since 1980, of buying distressed assets, and lived a lot of that back in the 80s, and then again in the 90s, and certainly in 2008 thereafter. Mm-hmm. Like you and I talked before the thing, I see that coming again.
Okay. Yeah. Do you mind touching on that? I know I saw your State of the Union was posted today. I haven't had a chance to check it out. I do plan to, but do you mind touching on some of the takeaways from that?
Yeah, in our little NoteSchool YouTube TV, about the last Wednesday of the month, I will do kind of a summary of something. And so a lot of times it's, where the market is. YouTube doesn't like you to use the word state of the industry, by the way.
Gotcha. State of the industry.
I know. Well, we learn. Okay, we had to figure out how to re-say it a little bit. There you go. But it is a state of the industry. It's what it is. But they don't. It's their platform. I have to operate with their rules.
Yeah. That's why I said State of the Union, right? That was totally intentional on my part. No, I'm just kidding. Go ahead.
I think some of my staff called it that, and I really do. That probably really wasn't going to be a thing, but
right.
So, but we are in a really weird market. We're in the weirdest market that I've ever been in 40 years.
That's saying something.
At the moment, we've got residential real estate sales that is on fire. Hottest gain in 15 years. There's 35% less properties listed than were listed a year ago. Right? 33, I think, was the number. Okay, well, that's crazy because that means that every time you put a piece of real estate on the market, there's a feeding frenzy. There's a fight in the front yard, so to speak, of who's going to get it, right? A bidding war.
Sure.
Right. On the other hand, if you pay attention to all the mortgage banking and the distressed asset management folks, which of course we do.
Mm-hmm.
You got 17 million households that either didn't make a mortgage payment or a rent payment.
That's a whole lot.
And it's a crazy number.
Mm-hmm.
59% of the households in Louisiana did not make a mortgage payment or a rent payment.
Wow.
So understand there's this crazy, my marketing guy was listening to the YouTube thing. We play it live too. And so he listened to it and he's a student of the game.
Mm-hmm.
He said, Eddie, what you're describing is a dam that is just filling up with water and filling up with water. And all of a sudden it breaks. And up until it fills up with water, like who would suspect anything's wrong? Right? Because, you know, the water's calm and everything's good. And I said, yeah. And I said, it's just the weirdest thing. Like people are trying to absolutely get me to throw the dart and say exactly where it's going to land. And I can tell you right now, anybody that tells you 100% where it's going to land is probably just full of bull. But I will tell you this. What I'm saying is consistent with what mortgage banking is saying. Mm-hmm. It is inconsistent with what some residential real estate economists are saying.
Interesting.
Okay. But let me tell you this. Mortgage banking is kind of like it's kind of like the breakfast thing. You got the chicken and the pig. Mm-hmm. Mortgage banking is the pig. Okay. The real estate industry is the chicken.
Okay. So how do today's conditions compare? I mean, I know 2008 to 2010, everybody wants to compare those two, that time to this time. And obviously then the crash was initiated by real estate.
Well, one thing that is easily comparable is shadow inventory. Okay. This is inventory that hasn't been forced to be put on the market, but are likely to come on the market at a later date.
Okay. And you're talking specifically non-performing notes or REOs or all of the above?
Well, I mean, I know this isn't necessarily what this podcast is today, but I do a lot of real estate investor podcasts.
Mm-hmm. Yeah.
And I do them for the guys that are, as far as they have audiences from beginners to the most seasoned guys in the business.
Yeah, I mean, we have a lot of listeners who are very interested in buy and hold rental properties.
If I were chasing a customer today that's likely to sell to me and sell to me on terms, not just wanting cash, mm-hmm. I'd chase burnout landlords. Okay. They are dying.
So if I'm a brand new note investor, I mean, I am a new note investor compared to you, but a brand new note investor with, 0 to 5 notes, that's.
Well, I mean, this isn't note investing. This is note manufacturing.
Okay. So
like what you're doing is you're buying a property, mm-hmm. specifically a burnout landlord. And you're going, why would I go buy his house? Mm-hmm. He's already got a tenant in it that didn't pay in. And he can't collect the rent. Why do I want to buy his problem? Wait a minute. This is what creative financing is. This is structuring the deal even to the point where you aren't required to make a mortgage payment unless you're collecting a payment. You bake in a forbearance agreement when you buy the deal.
So do you mind just kind of quickly walking us through a very basic example of how that might work for somebody?
All right, so you're the seller of a property. Mm-hmm. You got a house. It's a nice house. You're an amateur landlord. You represent 70% of the market. You own 1 to 5 houses. Mm-hmm. You self-manage, and you told your wife that you were going to diversify from the stock market and you're going to take your money and you're going to put it in the most profitable thing out there is real estate. And you said, honey, we're making an investment. Okay. And now all of a sudden, 3 years later, she's reminding you that you bought a job.
Yeah.
And it ain't exactly a fun thing at the kitchen table.
No. Yeah. It's funny. My wife and I have a small rental portfolio, and I can relate to this. and she's helped me out a lot with it. And we don't need to go down that rabbit hole too much, but
It's the real story.
it's not passive. I'll tell you that.
It's not your story. It's the story,
Mm-hmm.
right? But it is your story, and it's their story.
Mm-hmm.
So now all of a sudden, you hated the rentals before. You hated the rentals, but it was a love-hate relationship because the lift in value made you genius. The management of the rentals was terrible, but the market took care of you, and now you've had this lift in value. Now all of a sudden, though, big problem. Right now, by the way, your rental didn't necessarily cash flow very well because you had these surprise invoices. Am I right?
Sure, it does happen. Absolutely, yes.
So people, residential rental portfolio is a long game, and most people look at it as a short game.
Yeah.
Right? You know, we're sort of in a microwave society.
That is true.
So now all of a sudden, they're not collecting rent. If I were a guy wanting to start out in the business, you can easily buy data of rental property owners. Okay. There's a count of 90,000 in Dallas County, Texas. Trust me, it ain't nothing to it.
Wow.
Right. I'm not the ultimate real estate investor, but I've trained a couple of hundred. I've been to a NoteSchool class in the last couple of years. So I know exactly how they source all this stuff.
So I buy.
Buying the data is easy. 60% of these landlords paid cash. So they have equity. They are not looking for you to cash them out at a discount. They are looking for you to get rid of their real estate problem.
Get rid of the problem, sure.
And if you cannot discount it, they're willing to take their payments over time. And now you got a deal.
That can also help with tax liability, right, for them too.
Exactly. You bake all the stuff in the agreement that a bank or a mortgage company would never let you do as the borrower, but an individual will. You wrap it. And guess what? Who are you going to sell to? Another amazing statistic. 35% of the people that could get a mortgage last January can't get a mortgage this January. 35%.
Wow. That's pretty amazing.
It's called the mortgage credit availability. So the penalty box buyer, the guy that needs seller financing because he's been left out in the cold from traditional lending, 1,000 people last year that could get a mortgage, 350 of them can't get a mortgage this year. Okay. So the opportunity for seller financing is excessively better than it was.
Sure. And you think it'll only remain that way for the next? Mortgage
banking ain't backing up. They've already made it really clear. Like mortgage banking they're looking at the long road going, you telling me there's 17 million households that are making a payment every month? Let me just tell you something. That does not lead to great things in residential real estate.
So you come in, you I'm assuming teach your students this to do what you're saying and go in and buy the property at a discount and create
not necessarily at a
discount, but on terms that are favorable to you.
So that's how I help a real estate investor. People say, what does NoteSchool do? Okay, well, that's a good example. We help a real estate investor because he wants to go do that. Okay. Now, on the other hand, Jamie, some may be more like you. You're like, dude, I don't want any more real estate problems. It would be a terrible subject to bring up to my wife. I just want to buy paper.
Right.
So now what you realize is there's 100,000 seller finance notes created every year. Okay. There's non-performing notes. We're not going to see an avalanche of non-performing notes for a little while. And it probably is going to be into the edge of 2022 before we do. Because banks have to charge the loans down.
It takes time, right?
It takes time.
Okay.
But it is coming. And on the other hand, maybe your wife says, well, honey, why don't we just buy notes and be the bank? And you buy a note and you're the bank. And then all of a sudden you buy 3 notes. And then your wife looks at your checking account and she goes, Jamie, we've done really good, but we're running out of capital. And you're going to say, honey, here's what we're going to do. We're going to do the Eddie Speed Capital Recoupment Plan.
Okay.
And what we're going to do is take one of these 20-year notes and we're going to sell 10 years worth of payments. And then for 10 years worth of payments to some passive investor, not us, not somebody that we know how to go find stuff. We're resourceful. We put stuff together. This is just some guy that doesn't know how to find it. And he doesn't want a headache. He just doesn't want to rent a house with invoices anymore. He's a burnout landlord with capital, with no tolerance, right?
Sure.
So you sell 10 years worth of payments for about what you paid for the whole note.
Selling a partial, right?
Boom.
Okay.
You got your money back.
Yeah.
You got long play of money. You got no money invested in it. And now all of a sudden you figured out how to build your own bank with a burnout landlord's capital.
Okay. Let me ask you, because we have, as you know, a lot of note buyers in the audience. So if I'm looking to buy a seller finance note as opposed to creating one, are there what should I be looking for? Should it definitely be going through an RMLO and underwritten that way? Should it be closing at a title company or attorney's office? Are there 2 or 3 things I should be looking for as a note buyer of a seller finance note?
Seller financing, I've been doing it 40 years. I bought 50,000 of them. Seller financing, it's going to be really hard for you to restrict your business and only buy notes from people that do it perfect. Because honestly, there's just not enough of them.
Sure.
Most people that seller finance have good intentions, but they cut some corners, and then you have to go get a read to figure out if the deal has enough redeeming factors to buy it.
That's a good way to put it. I mean, I've bought some seller finance notes, and yeah, none of them are 100% wrapped up with a nice little bow on them. But typically I'm willing to take that risk depending if it makes sense from a price.
Redeeming factors, right? I mean, there's, we'll Note School will go through a waterfall of here's what drives the value of a note. Here's the characteristics. Here's a scale. Here's how you do this. Here's how you do that. So we address all that. I'm not going to try to do it in the podcast today, but obviously we've answered this question thousands of times.
Sure.
And it gets down to it is this. Okay, I'm buying a note. It's been paying for 3 years. They did not vet the buyer the way I would have up front. They don't have the qualifications. They don't have all the credit. They don't have all the financials, blah, blah, blah. But whoa, he's got a 3-year pay history.
Yeah.
And that 3-year pay history will outweigh a guy that had all the information. Now you might not buy it with 2 months seasoning, but you would buy it with 3 years seasoning.
Yeah.
You see what I'm saying?
Yeah, absolutely. And it gets to the point, honestly, where of just human behavior. One of the, as far as predicting human behavior, I think past behavior is a pretty good indicator. Whereas just kind of putting together some paperwork and trying to predict that without that history is kind of difficult. So I get what you're saying. It makes a lot of sense.
It's measuring the propensity to pay.
Right. Sure. Okay. So you think this the whole seller financing thing is going to be here to stay for quite some time, I would imagine, right?
Well, seller financing is the alternative to conventional lending. So when conventional lending is really loose and easy, then seller financing gets thinner and thinner because people don't need to seller finance.
Right.
When the conventional mortgage market gets tight,
which it is,
then seller financing gets thicker and thicker. So if there's 100,000 seller finance notes generated in 2020, and there were for about the last 5 years. Okay. I fully believe it can be 200, 250,000. We could be looking into the future, and people say, well, that's crazy. Well, I mean, listen, I've been doing this a long time, and I can tell you that people will adjust and adapt to the market. Look how we've adjusted to COVID.
Yeah.
We don't even think it's weird now to walk around the store with a mask on. You think about that 2 years ago.
Sure, absolutely. Let me ask a question a little bit in the weeds, but do you deal with when people hear seller financing, it can mean a lot of different things. Do you deal with CFDs and land contracts? Do you deal with lease options at all, or is it more the traditional seller financing?
Well, seller financing has always been where the seller sold the property and financed their equity,
Hmm.
right?
Sure.
That could be papered with a note and mortgage, or it can be papered with what is commonly referred to as a land contract.
Hmm.
Certain places call it a bond for deed, certain places call it a real estate contract.
Hmm.
But 50% of the 50,000 notes I bought have been land contracts.
Okay.
So
Gotcha.
it is a form recognized by the IRS as seller
Hmm.
financing.
Hmm.
A lease option is not that.
Okay.
It
Yeah.
can be converted to that.
Hmm.
So you could take a lease option and convert it to seller financing.
Hmm. Because the transaction hasn't actually happened yet with the property.
It's not a sale.
Yeah,
It's an option for a sale,
makes
but it's
sense.
not a sale. A land contract is absolutely a commitment to sell.
Makes perfect sense. Um, so how have you all? You mentioned COVID, and it's a real thing, right? I mean, it's the pandemic, the shutdown, regardless of political views and that kind of thing. How have you all at NoteSchool and with your either your individual portfolio or your business? How have you changed things in the last 12 months?
Well, NoteSchool did great.
Okay.
NoteSchool is up student count about double of what it was in 2019.
Okay. That's
So,
impressive.
uh, so a lot of people figured out they have to learn creative financing in some form
Hmm.
to go do the business. So that was good. And I think we had prepared for that. We've been, developing training and kind of how you scale it and you fulfill it and all that stuff for a long time. So
Hmm.
had it been just, oh my God, we doubled in business and we weren't kind of a mature training company, we probably would have gotten smeared.
With
But we
that
can
much,
really
yeah.
put a lot of resources out there and don't feel like we've done good. And we are anticipating again a bigger growth even this year just for that reason.
Hmm.
And once again, I look at the training thing and we have developed a lot of different, I would say wings of the university. In other words, I help real estate investors with how to buy on creative terms.
Hmm.
I help another guy learn how to go build a self-directed retirement account. I help another guy go figure out how to buy non-performing notes. So we don't have our student base has different appetites.
Hmm.
Right now, when we do a regular 3-day class, we just put it all together. The reason we do is because people go, gosh, I never knew you could do that, or I never knew how that tied together. Like,
Hmm.
here's an example. What if you were creating seller finance notes, right? You were the real estate investor and you were owner financing property.
Hmm.
What if you then understood you could sell a partial
Hmm. Right.
and then get your capital back out of the house, but you leave a long-term play in it?
Right. And
You
then
see what I'm saying?
go originate another note, right? And scale that way. Yeah.
Yeah. So I show people strategies that I really showed real estate investors to kind of show them how to survive.
Hmm.
And you're just walking, you're just going up the ladder.
Hmm.
You're just getting one rung at a time. And when you get up to the top, you're like, oh my gosh, I can't believe all these dimensions. But when you're just going up the ladder, I've learned to keep people more focused. They just need to be.
Okay.
And so the virus has I don't I, it's been good for us. It's a blessing.
Hmm.
We're not there's no funny attitude about this, like we're not entitled or
Right.
we're not we know a lot of people have really been hurt bad by it.
Yeah. Chris and I talk about that we've talked about that on the podcast before, where, it's, we don't want to sound like we're spiking the football or selling, the fact is, but a lot of people have really been hurt, and both financially and health wise, and also the social side of things, where we're all disconnected now. But you got to recognize the like you said, the blessings when they come along and the successes when they happen. So you got to be able to take the good with the bad.
And we own a lot of loans.
Hmm.
So we have seen some slippage in the portfolio.
Hmm.
Not terrible. but certainly seen some slippage. And we try to be reasonable, and we need to look at a customer and figure out whether we need to advance them or do a forbearance or whatever.
Yeah.
We don't allow people to do it just because they're entitled.
Right.
We allow them to do it because they've been affected.
Sure.
And we want to be a helpful partner with them versus we don't want to feel like we're being abused. So there's elements of responsibility on the lender side, and there's elements of responsibility on the borrower side.
Yeah, I find that to be one of the biggest challenges. And, I've got nowhere near as the number of notes you do, but we've got about 36 notes at this point. But just trying to figure out, I compare it to parenting, figuring out when the borrower or the child needs support, or when they need, kind of, discipline, or it can be a difficult thing to assess. Do you mind talking briefly about that? Is it a fund that you run?
Yeah, so we've got, we call them capital stacks,
Okay.
right? So we've got different things. I own a company, and we've been buying notes for a long, long time. And I don't have my fund inside that company. So I have my own portfolio. And then, of course, we have a significant play in our retirement portfolio. We use self-directed retirement accounts. We use Coverdale educational accounts for education of the kids and so forth. And then we have health savings accounts, which are, by the way, if you don't do those things, you really should know how. Those are awesome.
Yeah, I need to look into that more. I sold a partial to somebody who is using one, and I've read up on it a little bit more now, and it's pretty fantastic. It's like a double tax savings.
It's crazy.
Yeah. So
and then we have private equity fund, and we raise money from accredited investors, and we bought both asset classes of performing notes and non-performing notes. And then we use a platform to kind of facilitate that, and that is called Notes Direct. So we own a platform. It's not owned by NoteSchool. NoteSchool students get to use it. Other investors get to use it. So it's just a platform called Notes Direct, because we saw a real shortage where investor could just go on and buy assets.
Right.
Like, how do you find a legitimate source that offers a note for sale and know that when you get it, you're going to have gotten an honest play of the due diligence that they had, that they gave to you, so that they're not trying to hide anything.
Sure.
Right? And so there was a gap in the market. We sell, 600 to 1,000 assets a year off of there.
I often recommend to newer note investors to check out your platform along with PaperStack, and just to, even if you're not going to buy an asset, or you don't necessarily intend to, I'm not suggesting they make offers without without intending to follow through, but check it out. It's a really good, you can go run some initial due diligence, and kind of, if you're brand new, kind of see where pricing might be, and kind of understand what makes up a note.
On the Notes Direct Facebook page, we do what we call Feeding Frenzy Friday. And so every Friday, a couple of our team members will come on there and take an asset, just analyze it and talk about it. So it helps people kind of see, like, what guys that look at the business, what do they look for?
Sure.
And so it's helpful to do it. And we'll have an asset of the week and stuff. And, I built NoteSchool because I just figured out I could do a lot more business with people when they were knowledgeable. That's why I built it. I mean, I was a note guy for 20 years before I ever had NoteSchool. So I did it to go figure out how to do business with more people. And then, of course, it's become its own
animal, huh?
Animal, right? But I wake up every day with a feeling that the reason I built NoteSchool still was to go show people how to do the business. I want to put what I call the golden handcuffs on people, meaning that the only reason they want to continue to do business with me is because it's so profitable that why would they not? Right.
Sure.
And if we train somebody to go do the business and we end up doing business with them down the road, listen, PaperStack or NoteSchool guys, that's how they got started.
Right. Yeah, that's true.
So,
Uh,
we're about a bigger world. We're not about exclusivity.
mhm. Um, couple other questions before we wrap it up here. I know you have another show to hop on here shortly. Um, what would you say are one or two of the biggest mistakes you made as an early note investor, or something you wish you'd known? Um, I know it's all dependent on market conditions and things like that, but maybe speak to the newer note investor, something that you wish you'd known earlier on.
This is going to sound, I didn't know this question was coming, by the way,
No, you did not. You did
and
not.
it's going to sound self-serving, but it's the truth. Let me just tell you something. There's two ways you can get education. The second way is not so good. The second way is the school of hard knocks.
Yeah, it's a really good
And
point.
I would never have, my father-in-law and a partner took me on as a kid in the business, and I didn't know anything. And you'd never known of Eddie Speed today had it not been for them and other things. And all I try to do in Note School is just give people a path of experience, and then they can start making choices in the business.
Hmm.
It's like a guy that, some 22-year-old tough guy, and he goes to the mountain and tells his girlfriend, I've never skied in my life, but don't you worry, I can make it. If you can ski, I can ski. And they go down the mountain, with a pair of skis on, and nobody's ever taught him the balance concepts of skiing and how to control your skis and so forth and so on. What do you figure is going to happen?
he's going to wipe out.
He's going to have 100% chance of a bad wreck, right?
Absolutely.
And so don't be that guy.
Hmm.
Don't be invincible. And at the same time, when you get some information and when you get some knowledge and some clarity, be an action taker.
Hmm. Right.
You
that's a
learn
good
a
point.
lot. Don't risk your net worth on a deal, but risk a little blood, and it will make you good.
Yeah, that's a good way to put it. I see, I'm sure you have many times, both sides, both extremes. You have the
That's it.
people. I had a call last week with a guy who's been researching and learning for the last 2 years, and he hasn't bought a note, and it's like, come on, man, like you got
To be honest with you, he wouldn't want to get on a conversation with me
to.
because I'd bust his chops.
Yeah,
I'd
sure.
be like, if you're wasting your time, don't expect to waste my time.
Mm-hmm. Sure.
But once again, you have to give, along with that, you have to give people a path. That's why I originally built Note School, for that same reason.
Makes a lot of sense. So one other question here: who do you look up to, either in the note space, I mean, or in just real estate, or the economic world, if you will? Now you're kind of like I said at the beginning, kind of a legend in the note space. So I've still got plenty of people like like yourself to learn from and to look up to. Who do you look up to? Who do you learn from?
Well, I mean, there's great business people. I mean, if you want to know how to keep your head on straight in business, what greater example could you have than Warren Buffett?
Oh, that's a good one.
I mean, he's not emotional.
Mm-hmm.
He's well informed. He's a business owner
Mm-hmm.
that looks at how the whole business works, and just really just in my mind, just really a perfect example of where you'd want to grow to in the business. We scrape a lot of data. We scrape a lot of data like weekly and daily, because we're trying to keep a grip on the market, and we have a lot of people relying on us, as you said, trying to listen to us and figure out where we think this market's going.
Right.
And so I'm a little frustrated with some economists right now.
Okay.
I'm not going to mislead you, because what they're saying does not line up. When they tell me how great residential real estate is going to be for the next 2 years, and yet they don't tell me that mortgage banking is off 35%, and they don't tell me there's 17 million houses that hadn't made a payment in the last few months, then I got to think they didn't measure all the facts.
Yeah, that's a really good point.
So I'm at a point right now where I say, look, if I can help you with one thing, I just want to help you to make an intelligent, informed decision. Let you make your own decision, but let me support you with some facts, with sourceable data, and that way you can make a better informed decision. I think that's my obligation to the industry. So
That's great.
I'm not. I don't really know right now on the residential real estate side who exactly I'd tell you to go chase, because I've heard some predictions in the last few months that where as I said, they didn't give me all the measurable facts.
Gotcha. No, Warren Buffett's a great one. Is there anything else we haven't touched on that you'd like to hit on, Eddie, before we wrap it up?
We're coming into a market to double your net worth. We're coming into a market to double your net worth. If you can't double your net worth in this market, you're not pursuing an appropriate strategy.
Well, that sounds good to me.
No, I mean, like I'm saying there's people that won't double their net worth.
Right.
But if they're not doing the right thing. And I'm 61 years old and I've been doing this a pretty long time. And and with 1,000% integrity, I can look straight at you and say, I plan to double my net worth in after this pandemic.
Sounds like a plan. Eddie, where can people reach out to you if they want to learn more? I know we've thrown out a few things already. Where can people find you?
Yeah, so we've got a good little starter kit, and this is for people that want to learn investing. It's a slightly different angle if you wanted to do the real estate investing buying on terms model, but just noteschool.com, grow wealth.
Okay.
And there's a good solid little information, particularly about self-directed retirement account and tax advantage accounts is what you mentioned. And then we've got a good little training that we can do with the case studies and stuff. People learn from case studies. So we like using that example. And so there's a good solid little angle there that people can do, and it'll just give them a, direction and some clarity. We'd love to come see them at a class, but I have learned this. If I push somebody to come see in a class and they're not like prepared for it, then they miss some of the real picture of it.
Sure. Makes a lot of sense. Well, Eddie, thank you very much. I really appreciate your time, and this has been really valuable. So we'll have to have you back on after the pandemic when you have doubled your net worth. And
you too.
There you go. So thank you so much, Eddie. And for everybody out there, make sure to give us 5-star reviews if that's accurate, and go out and do some good deeds. Take care, everyone. Thanks.